Welcome to the Trading Story Podcast, episode 35. I had the opportunity to speak with Akil Stokes. Akil is not trading Forex as the chief currency analyst at Trade Empowered. He's coaching track at Millersville University. So we talk sports, Forex, and trading, of course. Helpful conversation whether or not you want to trade FX. Let's do this.
The markets are complex, but some traders have figured it out. These traders had one thing in common, a relentless drive to trade the markets successfully. These are their stories. Trading Story aims to bring newer traders inspiring and practical tips from traders in all walks of life. Here is your host, Brandon Clay.
Hello, everyone, and welcome to the Trading Story Podcast. Today we have a special guest today with Akil Stokes. Akil is the chief currency analyst at Trade Empowered. He's also an assistant coach for track and field at Millersville University. He holds a Bachelor of Science and a Master of Education from the same university. And Akil is a full-time Forex trader. Akil, welcome to the program.
Hey, thank you. Thank you so much for having me, Brandon.
I was reading through your bio, and I know you trade, you run a trading room, you post trading videos, but tell me about your coaching career.
The coaching. Well, I was a former athlete at Millersville University. I've been an athlete my entire life. I did football there and went on to do track. And I graduated. I guess I had a natural leadership ability. I never planned on coaching at all, but when I graduated, I had planned on going to grad school, and we had a new coach at the time, and he said, "Hey, I like your leadership skills. I'd love you to stay on and have you help me out as a coach." And I was like, no way. Then he told me about the money and how he could help out with grad school, and I was like, you know what? It sounds like a pretty good idea. So I definitely enjoy coaching. We had a very successful year this season. I had 2 All-Americans, which was the first time in school history from those events. And it's really just an outlet from trading, sitting in front of the markets all day. And I'm fortunate enough to be working with traders on a regular basis, but a lot of traders are just there by themselves, and it's lonely. So it gives me that social interaction that the markets just can't give me. So I love it. I love it.
That is cool. And it's track and field. What events are you coaching?
Sprints and hurdles. So the glory events, the ones that run really, really fast and look really, really powerful.
Nice. Well, tell us a little bit more about yourself and the trading aspect and what you trade.
I'm a Forex trader. I started off with stocks and eventually made the switch to Forex. So I'm 100% strictly in the currency market right now.
Awesome. And then for the newer traders out there, can you briefly explain what Forex trading is?
Forex trading is the foreign exchange market. So you're trading, we call them pairs. So the European dollar versus the US dollar. So the euro versus the dollar, and you're trading the pairs against each other. So euro dollar is one. You have the dollar CAD, pound yen. There's a lot of them. I try to stick to I really try to stick to the major pairs. I don't get too exotic. The spreads widen up quite a bit. But essentially you're trading currencies against each other. Obviously buying and selling. When you're buying one, you're selling the other.
Do you have a favorite pair that you like to trade?
I don't have a favorite. I try to stick to the majors. So euro dollar, pound dollar, euro yen. The pairs that are going to give me enough action, enough opportunity. Again, I'm not really a fan of the exotic ones, not only because it's going to cost you a little bit more to get involved with them, but they're just the same action isn't quite there. And sometimes you get this sporadic movement that really isn't good for my type of trading.
So how did you get into trading? What is your trading story, Akil?
Well, I started off, I guess I didn't really know what trading or investing was until I got out of college. I graduated college back in, 2007, and it was right around the time where there were no jobs out there. So I signed up for grad school to kind of give myself an excuse. Parents and everyone asking, "What are you doing? What are you doing?" And instead of saying, I'm jobless and nothing, I say, "Hey, I'm in grad school. I'm getting another degree. And while I was in grad school, I just kind of picked up on investing. My dad had taught me from a young age just different types of investments. It's obviously starting off with a saving account, working my way up to CDs and money market accounts and stuff like that. And investing in the market was just the next step. So that's kind of how I got my feet wet with stocks. And I did I traded stocks for a little bit, and I wasn't too bad. I look back at it now and I kind of laugh because I really had no idea what I was doing. I had this office I traded out of. I had two TVs on, CNBC on one, Bloomberg on the other, stacks and stacks of Fortune magazine, Smart Money, and I would sit there and I would just go through all this data all day. And I don't really think I used it for anything, but that's what you see on TV. That's what you hear about. So I thought I was doing the right thing. Um, but eventually, and again, I did pretty good. I don't luck, skill, a little bit of both. I did pretty good with my stock investments, but it wasn't enough to make a really make a career out of it. It was longer term ideas and not enough that I can live off of. And as I got more experience with it, I really wanted to. It became more. It went from a hobby, I guess, to something that I really wanted to do. And at the time, I remember working three jobs while going to grad school. I was working in an elementary school with children that had mental and behavioral health disorders or health issues, which in hindsight was a great job. I can see a lot of the patience I earned or learned during that job now in my trading. But I did that all morning. I coached track in the afternoon. I went to grad school at night, and then late at night, I would. This is the part everyone gets a laugh out of. I was a part-time janitor, so I was.
Oh, really?
Yeah, I was cleaning banks and cleaning daycares and preschools. And I'll tell you what, cleaning preschools and daycares, those little kids leave a lot of unsavory things behind.
Oh, man.
Yeah, so it was. It was bringing in good money. It was. I think between all those jobs, I was making about 35K a year, which, for a single, just out of school person with three roommates, I was rich.
Yeah.
But it came to the point where it just wasn't. I wasn't happy with what I was doing, and I didn't see myself. I knew I couldn't do this for the rest of my life, and it came to a point where I decided to give trading a go full time. And now I went from stocks to the currency market. I had a friend told me about Forex, and he told me all the things you hear today on the internet. Hey, double your account in, a year, make 50% a month, all the stories they say to get you involved. And, I'm like, yeah, that sounds cool. Let me do it. I can double my account in a month, I'll quadruple it in a year, and then I'll be a millionaire in 10 years. That's what piqued my interest. And of course, I later found out that's not the case. But that's how I initially got into the Forex market, chasing that dream of tripling my account every year and making tons and tons and tons of money. But I did have a passion for it at the same time, I must say.
Nice. And how long have you been trading now?
I've been trading since 2007. I would say I've been trading. The second phase of my trading really started in 2010 after really, getting a mentor and taking a professional training course. But 2007 is when I first started.
And since then, that's been about 5 years or so, something like that. Since you've turned a corner, maybe gotten the mentor, what has trading done for you and your family thus far?
I guess, and you probably hear this a lot, it's just the freedom. And it's not even financial freedom. Yes, it does offer financial freedom. I'm able to work from home. It's very important to me that I do not have a boss. I'm in control of my own future. I can go as far as I want. I just have to work harder. But it really gives a lot of freedom. It also allows for my wife, we just had our first kid. She's able to stay at home and be a good mother to the kid without worrying about, getting a daycare or working another job. So it's really a lot of freedom that it allows. And I guess more so the freedom of time. The most beneficial thing of being a professional trader, again, is I am my own boss. I can make my own hours. I can essentially do whatever I want throughout the day. If I want to spend 3 hours trading the market and go play golf in the afternoon, I can do that. I'm
That's
not,
awesome.
yeah, I'm not, I don't have to do this 9 to 5 and be here for a certain amount of time. And I think that freedom of having time to myself and being able to make my own schedule is, that's what life should be about.
Akil, every trader loses. I think we all know that. You've been doing this long enough to see maybe a few of those. But take us back to your most painful losing trade.
Well, I got two of them for you, if you don't mind.
No problem.
Um,
That sounds good.
Gosh, I hate telling the story, but everyone loves it. I was managing money. I was managing money for a client, and I haven't managed money since, and you'll see why in a little bit. But I was managing money for a client, and we had gotten to the point where the client was really unhappy with the returns. Now they were good returns, a steady 2-3%, which is exactly what I wanted. But the client
Two,
was
2 to 3%
a
per
month per month.
a month.
Yeah,
Okay,
which
great.
is, I've always been told, hey, if you can do 2-3% a month, you're one of the best traders out there. So I was pretty happy with that. Um, Unfortunately, the client didn't understand. He's like, well, hey, you're doing good, but you should be making more money. I think we should be increasing the position size. And I tried to explain to him, hey, well, I want to keep the position size small. That way, if we take a hit, it doesn't give us that much of a drawdown. And the number one rule of trading is don't go broke, don't lose money. A small consistent gain is a lot favorable. But I wasn't really mentally tough at the time, and I was under the impression that whatever the client says is right. So after a few good months of trading, I essentially started doubling the position size, and it was a really bad week. It was a week where
Mm.
I don't remember what was happening in the yen, but I had about 6 yen pairs in my portfolio. Lesson learned about having that many that many uh, pairs in the same portfolio. But I had 6 yen pairs in the portfolio. I got filled on all 6 trades at the same time, and they just all went south on me, and I ended up losing about $30,000 within a matter of a few weeks. And
Ooh.
um, the heart just sunk. If I could have afforded one at the time, I would have broken my computer. And
Mm.
what's worse is this. That wasn't the bad part. The worst part is I just went through a mental breakdown. I said, you know, trading isn't for me. I'll never do this. All the negative thoughts that come into your head. And I literally shut down my computers and didn't trade the entire next week. I was just in a very dark place. And a week later, I recovered. I pulled myself up together and said, "Come on, Akil, you're a fighter. You can fight through this. You can do it. Let's get back on track. It's not the end of the world. It's a big drawdown, but not really big compared to the account size I was trading." And when I loaded my computers up and was doing my analysis, I saw that if I would have just kept trading the next week, that not only would I have made that $30,000 back, I would have made about another 20 to 30,000 on top of that. And
Wow.
that's when, I don't remember what the move was, but it was some impulsive reaction, and then, the market corrected itself. And I'm like, and that's what really hurt. The fact that this whole time, my mentor had told me, hey, you stick to your plan, you trade your plan through the good and the bad. And when it got bad, I bailed. And because of
Mm.
that, I missed the good, and I just blew it. So that's probably the most painful trade I had. Another one came a little bit later. Once I was still working on becoming a consistently profitable trader, and I had a very good month. Long story short, my mentor had placed a trade on a higher time frame, a time frame that I wasn't supposed to be trading on. I followed him just because I was hot. I felt like I couldn't lose. Anything I touched would turn to gold. And I said, you know what? Great month. Let's take this trade because it's going to be a winner too. I got too cocky. Took the
Mm.
trade on a higher time frame than I was supposed to. The stop loss was a lot more than what my account was supposed to, or what my limit was supposed to be. And that single trade ended up, taking away all of the profits gained that entire month. Um,
Wow.
so two two war stories, and hopefully your listeners can learn from that and not do the same thing as I did. But great teaching moments in hindsight, of course.
Yeah, no doubt. It sounds like your turning point, you've mentioned it now a couple of times in your trading. You started trading in '07, and then your turning point seemed to come around 2010, you know, give or take 5 years ago. What was it that caused that turning point to happen?
Turning point came really after I stopped blaming everything else. I would blame everything but myself for my failures. It was the system. The system was bad, or the markets are against me, or whatever I can think of. And it really came to a point where I looked myself in the mirror and I said, "Hey, Akil, it's you. You're the one making these mistakes, and you've got to stop it." And at the time, it had come to the point where I don't want to say I had given up on trading, but I was, when I first went on the trading journey, I did something really dumb. I quit 3 of my jobs and said I'm going to focus full time on trading. I put a lump sum of money away to survive, and I said, hey, I'm going to make it within a year, and if I don't make it, that wasn't even an option. I'm going to make it in a year. And well, that year and some odd months were almost up, and I said to myself, hey, you know what? Trading isn't going to work for you. You're going to be back in the job market in a few months anyway, so let's just focus on what the mentor has been telling you. Let's just follow the plan and not worrying about how much profit I can make. Just execute good trades. Just take good trades. And I started tracking my mistakes. And I would do something like, hey, in January, I'd review my trades from January. In January, I would make 30 mistakes, just to give out a number. And my only goal for February was to make one less mistake. So as long as I made 29 mistakes or less in February, then I would tap myself on the back and say, hey, it was a good month. And it's funny when you do that. When I stopped worrying about how much money I was making and just executing good trades, the mistakes got smaller and smaller and smaller. It went from 30 trades a month or 30 mistakes a month to maybe 25 to 15 to 10. And as those mistakes got less, my account balance started growing.
Wow.
And that's what really, I preach something to my clients that, process over outcome, where it's not about the outcome of the trade. That doesn't matter. It's about following your trading plan and doing it the right way. And that was when I realized that, hey, if I just do this the right way, I'm not getting as emotional because I'm not counting dollar figures, but the plan does work. You just got to focus on the plan and not how much money you're making from it.
I love that. Process over outcome. Is that original, or did you get that from somebody else?
No, I didn't make it up. Again, it was a lot of the stuff I have comes from my trading mentor. You know him, Jason Stapleton. He taught me that process over outcome. Todd Brown is another mentor of mine. Nice. And their whole focus was, the plan. You do all this work on the plan. You make sure it has a positive expectancy, meaning that over time, if you consistently trade it, it will make money. And you just follow the plan. A great example is if, say me and you, Brandon, were to play a game of heads and tails with a coin, and I were to tell you, hey, every time that it lands on heads, you get $1. Every time it lands on tails, you give me 50 cents. Well, your goal isn't to really pick and guess which one's going to be heads and tails. You just, you want to play that game over and over again, because if it has a 50-50 chance of happening, you're going to make more money than you win than what you lose when you lose. And, it's just the process of going through it is what I learned from that process.
I love that. So let's shift a little bit, get to something a bit more practical. Let's talk a little bit more about your trading process, a particular strategy maybe that a newer trader could employ. Tell us about one of your favorite trading strategies for one of those newer traders.
Well, one of my favorite strategies, I guess, I've got a few of them. It would be one I call the CTS system. It's the combined technical scoring system. It was again, I mentioned my mentor a lot, but I do owe so much to him for teaching me to trade the right way. It was a system he used in a trading challenge where he got, I think it was 3rd place. And what it is I guess the trading technique is based off price action, structure, Fibonacci ratios, just reading a naked price chart, no indicators, no none of the fancy stuff, Bollinger Bands, none of that stuff. Just reading a price chart. And the CTS system, it stands for Combined Technical Score. And what it does is it takes a handful of items that we would look for in the market. For example, an RSI being overbought, or a certain Fibonacci ratio, a harmonic move, major structure, higher time frame confluence, stuff like that. And it just puts it into a nice checklist to you. And each of those items is scored between 1 and 3 points. And what you do is whenever you look at a chart, essentially you just go through the checklist. You're looking at a price chart and you say, okay, do I have this? If so, give myself 1 point. Don't have that, 0 points. I have that, that's another 2 points. And obviously you do a lot of testing for it to tweak it the way you like it. But essentially, when you add up your score, if the score reaches a certain amount, then you take the trade. If it doesn't reach a certain amount, you don't take the trade. And it's as simple as that. And what it does best for a trader, and this is why I like it for new traders, is it allows you to look at the markets the same way each time. I think a lot of traders get into trouble because one day they look at the market this way, they're looking for this, and the next day they're looking for that. This one is consistency. Every time you stare at a price chart, you're looking at A, B, C, D, and you're going through the same checklist over and over again. It allows you to be very consistent as a trader.
And we mentioned earlier on that you're the chief currency analyst or a trader over at Trade Empowered, and you guys have a lot of education materials on your website. Is there a place that outlines this particular scoring system?
Not in any of the trading we have on our website. I do teach it in one of my training courses, but not on our website. We don't outline. We talk about the different factors of it, but we don't put it together in any of the free training. Mainly because in the free training, we found that if you get too detailed, you confuse traders and you hurt them more than you help them. We always say, hey, I do a lot of seminars during the year, and I say, hey, even though I taught you guys this stuff, I don't want you going out and trading it right away because you only know enough to hurt yourself. On our website, we try to teach a lot of the basics: how to read a price chart, how to identify structure, how to use a Fibonacci. So we teach all the same skills that go into the checklist, but we don't quite put them together for the trader yet. Just because we really don't want traders going out there and thinking that they can do this right away, because those are mistakes that I've made in the past, and it usually ends pretty bad.
Okay. Well, maybe to keep this practical for the newer traders out there, the idea might be, all right, we have a lot of indicators that are out there, and a lot of these mean something. But if you add them together, if you stack up the indicators and you understand each one, and each one is pointing in a particular direction, then that gives you a more safe indication that you're going to make a safer trade, right? If all of those indicators line up correctly. Is that safe to say? Yeah,
it's safe to say. Again, I don't personally use any indicators, but it's the same thing. The more you have of whatever it is, the higher the score will be. The higher the score that you have, the better the trading opportunity is. So, for example, the CTS system runs from a score of 1, or I guess 0, which you wouldn't take the trade, but 1 to 13. If you have a trade that lines up to 3, with only, say, 3 indicators or 3 factors lining up, that is going to be a lower probability trade than one that gives you a score of, say, 10. And you can actually, we tell traders, if, it's up to them on what score they want to take it, depending on how risky of a trader they are. If they're an aggressive trader and they see a CTS score of 5, they can go ahead and fire off the trade at 5. If they're more conservative, if they want a higher win percentage, they only want to take the best of the best opportunities, then they wait for those scores with 10, 12, 13, stuff like that.
Got it. All right. Well, yeah, hopefully that can be practical for some of the newer traders out there if they understand a bunch of these indicators. You add them all together, you look for higher scores, you look for all the indicators that are giving you green lights, and then you take those trades.
Exactly. But the key is that you're doing the same thing each time consistently. That's the key.
That's good.
Yep.
That's really good. So trade selection, it sounds like that's how you decide, and you're only looking at the major currency pairs, which give me a rough estimate. Is this about 10 pairs that you're looking to trade?
I watch about 11 right now on the higher time frames, yes.
Okay. And so let's say you take one of those trades. How do you decide when to get in? Well, we discussed that. How do you decide when to get out, both for a profit perspective and also a stop loss perspective?
Okay. Well, for profit, structure, support and resistance is a big part of my trading philosophy. I believe in that more than anything else that you'll see on the price chart. I do use Fibonacci ratios, but at the end of the day, major support and resistance levels are key to me. So with profit taking, I will look for the most recent support and resistance levels and look to take profit at those levels. At the same time, with my stop loss, I'll look for the most recent support and resistance levels on the other side of my trade, and I want to get my stops above there. Now, I don't want to get it. The key is I want to be wrong quickly. Once the market tells me I'm wrong, and I can know that by reading a price chart, once the market tells me I'm wrong, I want to be out. I don't want to be one of those traders that sits and hopes and, okay, it may reverse, it could come back. If I'm wrong, I want to be out. I want to take my little hit and move on to the next trade. One of the things that I'll do with target profits is I try to think like the other trader. So let's say that I'm bullish the euro dollar.
Okay.
I'm bullish the euro dollar and I'm looking for a profit target, obviously above where I entered. I'm going to think, well, if I were a bearish trader, where's the next opportunity I would be looking to get short? Where are the bears having their positions at? And I want my profit target to be right before that level because I don't want to fight them off. I don't want to get greedy and try to hold the trade past an obvious level where the bears should be seeing some selling pressure. I want to get out at that level, take whatever profit I can get, and then look for the next opportunity. So I certainly don't want to get greedy. I don't look for the big home run trades. I look for safe spots where the market should reverse at, and I want to get my little piece of the pie. I want to leave and then look for the next opportunity.
I think that's really interesting. I don't know if I've ever heard anybody say it that way, where you think about what the other side is thinking about, and then that's where you decide whether or not you're going to get out, or you want to get out right before where their levels might be.
Yes. Yep.
That's pretty cool. So how much are you risking on each of these trades that you're putting on? Percentage of account size?
It's tough because I base my risk off the entire portfolio. So I'm not risking. I don't follow a money management strategy that says, hey, I won't risk more than 3% on any given trade. I trade a consistent position size. I would say just in general, I'm not too risky of a trader. I would say there's no trade that I'm going to risk more than 2% of my total account. I won't take a hit that big. I don't like putting it in simple terms like that because, again, it is based off the entire portfolio, and I look at what we call a maximum allowable drawdown, like how much of a hit can I take if everything were to go bad at once. But in general, I would say about no more than 2% per trade.
Okay, and then how many positions approximately are you having on at any one time?
My money management will allow me, I can have all 11 positions on at the same time. Now that's rare. I don't think it's ever happened. But typically I won't have more than 5 positions on at any given time. Okay,
so maximum drawdown then, if all 5 positions hit your 2% stop loss, you're looking at a 10% drawdown. Is that a really bad day?
Yeah, that would be that would be a really bad day. Typically, just to give you an idea, typically I've been very good with controlling my drawdowns. Typically, I don't have more than, I think on my worst weeks, maybe I'll hit about a 6% drawdown. I haven't had, and knock on wood here, of course, I haven't had any weeks where I've hit 10%. Typically, I keep them above that 6%. But that would be a very bad day if I did take a 10% hit. But I would trade right through it, as mentioned before, and hopefully I can get that 10% back.
So 6%, that's going to hurt a lot, right? How do you keep your emotions in check when you have one of those weeks or days or whatever?
Well, I kick the cat as hard as I can now. It's tough.
We're not editing that out.
Oh, right? Man, Pete is gonna kill me. I don't own a cat, for all you cat lovers out there. Don't worry, because of that reason. But it is tough, and I think those drawdowns, psychology is the number one thing in trading. That's why so many traders fail. It's not the system, it's not the strategy, it's the emotional side of things. And unfortunately, as humans, we have emotions, especially when it comes to money that we're losing. And I think even so, pride. I think a lot of traders take too much pride, where if the trade goes, if they have a bad week, they think it's them. They're bad, and it's we can't control what the markets do. It's not our fault. But what I do is this: I have a 100% belief in the system that I trade, and that comes from years of trading it. That comes from years of back testing data. So historically testing my system to make sure it works over time. And it's really just focusing on that process over outcome. It's how I define a good trade is, a good trade isn't necessarily a winning trade. A good trade is one where I followed my rules 100%, win, lose, or draw. A bad trade, even if it's a big winner, if I get lucky, I'm on the right side of a non-farms payroll report and I make 1 million pips. If I entered that trade for the wrong reasons, I've got to write it down as a bad trade. So I really just focus again on the process, and that comes from having a belief. And there's this triangle or a circle. I don't know what it's called, but the more you believe in something, the more you'll take the right actions. And if you believe in your system, you'll trade your system or your strategy the right way. The more you take the right actions, the more you'll see the results that you want to get. And the more results you see, the more belief you have in the system. And it just keeps cycling over and over again. And eventually the system and trading your plan is all that matters. It's not even about the money or anything.
How much time, hours-wise, per week does it take to prep, to back test, to do all the stuff that you do in trading and also put on these trades?
Well, the trading side doesn't take too long. I really don't spend that much time in the markets. I think a lot of newer traders perceive that professional traders are in front of their computers 20 hours a day. It's really not the case. I spend about an hour prepping in the morning. I can go through all my pairs on the daily charts, 4-hour charts, in about an hour and kind of set myself up for the day. I day trade as well, so I day trade from 8 o'clock to 11 o'clock, so about 3 hours a day. And then at night, I do one more round of a higher time frame analysis just to set up anything for the London session or when I'm sleeping. So really I look at the charts maybe about 5 hours a day. And about 3 of those hours are active trading. But, if I weren't running a live trading room and I was just doing the higher time frame trading, I would literally spend about an hour in front of my charts. I'd set everything up that I need to set, have my watch list ready, and I'd go do something fun with my life.
So you're looking at maybe for a new trader, if they were to do this for these longer time frame, which it sounds like they're swing trades, is that right?
Yes.
You're looking at maybe 5 to 10 hours a week, give or take?
Yeah. You can easily do it with 5 to 10 hours a week, as long as you're just, as long as you're efficient in your top-down analysis and you're taking notes and you're journaling and you know exactly what you need to watch and when you need to watch it. It really doesn't take that much time. We hear a lot of excuses from traders. I don't have the time to do it. It doesn't take that much time. You just have to fit it to your schedule.
And how much would a newer trader, if they learn the system, if they execute, I know there's a lot of ifs in there, but how much could they expect to gain with trading this particular way?
Well, expectations are hard. As you mentioned, it's typically not the system, it's the trader that will determine that.
Mm,
But like I said, I shoot for, if I can make 3% a month, I'm happy. And that's not every month. I do have losing months. But if I can average, that's a better way of saying it. If I can average 3% a month throughout the year, I'm very happy with that. I don't need 50% months or to double my account. I'm a slow and steady grind is quite fine for me, and I think that's really a realistic way of doing things. It's not about the big home run trades and gaining a lot one month and giving it all back next month. It's not, especially if you get into money management, that's not good business.
And 3% a year is nothing to sneeze at. I mean, that's 36% a year.
Yeah,
right.
it adds up, and if you add some money management to it, meaning that you're increasing your position size as you continue to grow that account, it's amazing what 3% a month can do. And I'm talking over a few years, you can easily turn a 50% return into doubling your account, if your money management is done the right way.
Nice. Ton of value. Really appreciate you walking us through that, and just great information for newer traders. As we're coming into the end of the interview, we go through a fast market round. So a series of quicker questions that you can give a one-word answer to, or you can elaborate paragraphs if you like.
Okay.
Starting off, what's the best trading advice you've ever received?
Process over outcome.
Akil, who is your trading hero?
I would have to say my mentors, Jason Stapleton and Todd Brown. Those are the two guys that I've learned from, especially Jason. So those would be my heroes. Don't tell them I said that though.
I'll let them hear it for themselves. Biggest mistake you see new traders make?
I would say exiting positions early. A lot of traders are very, very good at a lot of traders I see that are newer that contact me are very, very good at trading. They can analyze a price chart. They know when to get involved. The problem is seeing that trade out and really trusting themselves. And they will have a system that is maybe 60% correct, but they're taking profit targets, halfway through the trade. And, when you start doing that, you can be 60% correct and still be break even or lose money. So I think it's just early profit taking and not trusting themselves a lot or as much as they should.
What trading platform do you use?
I use NinjaTrader. I also use for a web-based platform I really like is TradingView.com. It's the best, in my opinion. It's the best free online trading platform that you can use, or that I've seen at least.
Your favorite online resource for traders?
My website? No.
That's a legitimate
That
answer.
is a good one. My website. I like forexlive.com. I'm not big on using. I don't use fundamentals to dictate what trades I take, but I am as a student of trading. I am trying to get better, just understanding the fundamental side of things. So I like forexlive.com. It spits the news out really quick. It doesn't give me a big article, so I can read it, a few paragraphs and know exactly what's going on.
Your favorite trading book?
Lots of them. I've heard this mentioned before in your podcast. Trading in the Zone is one. Market Wizards is a great one. I'm going to say Market Wizards, and the reason for that is Market Wizards is a book where, similar to what you're doing with your podcast, you're interviewing some of the best traders out there. Not saying that we're some of the best traders out there, but Market Wizards, as you know, interviewed the best traders of their time. And as someone that wanted to be the best, I figured, hey, why not? If you want to be the best, learn from the best. And I read it during a time where I was really struggling as a trader, and I expected to read it and see that these guys are super smart and they started trading and saw success right away. And I was surprised by reading most of their stories. A lot of them stunk at the beginning. A lot of them were really bad. I remember one story was, can't remember his name, but a guy was in the, I guess the stairwell and crying and had to call his mom to ask for money because he lost that much. And it was really a confidence boost because I'm saying, hey, if these are the best traders of their time and they struggled a lot at the beginning. Why? Then there is hope for me. I'm struggling right now. Why can't I can still be the best. So I think that was a very inspirational book. One Good Trade is good too. I love that one.
And Akil, for the newer traders out there, give us some parting advice.
Just stick with it. I would say that most traders fail because they quit before giving themselves a chance to succeed. There is a learning curve in this industry. If you really want to be good, you need to do something that's going to allow you to be good. You can't just keep doing the same thing and thinking it's going to work. So you need to make some type of change, and it doesn't really matter what that change is, but you need to do something different. But just don't give up on yourself. Stick with it, and you will see success if you work hard enough.
Awesome. Love it. Great information. And we're going to put all that info in the show notes page. So if anybody missed anything you said, we'll have it right there so they can click on the links and visit the sites and check out the books if they'd like. So tell us a little bit more about your latest project that you're working on.
Well, we've got some big ones at Trade Empowered lining up. I'm an advanced pattern trader as well, so stuff like Gartley's, Bats, ciphers, patterns using Fibonacci ratios and whatnot. And last year, or 2 years, we released a pattern recognition software trading or identifying the patterns the way we trade them. And we've got great reviews off that software. And what we're doing right now, we haven't shown anyone yet, but so you'll be the first to hear about it. Nice. We've actually our developers are automating that system. So not only will the software identify patterns for you, but it'll also enter you in the pattern. It'll play stops for you. It'll exit it for you. It's all automated. That way, for traders that want to diversify their portfolio, they want to be a pattern trader and a CTS trader, because they're two different styles. They can have one running in the background on a completely different portfolio as what they're trading normally. So I think it's going to be really, really big. I'm testing it right now to get looking to break it, looking to see what bugs are in there, but hopefully it's done by this fall. Man,
that's great. And we'll also put a link to the show notes to tradeempowered.com. Is there a URL that you want to share for that one?
No, that www.tradeempowered.com. That's
nice.
Lots of free material in there. Lots of it.
And Akil, if anybody wants to reach out to you personally, is there a way that somebody can contact you?
Sure. Feel free to email me. My email is Akil, that's AKIL, @tradeempowered.com. I read every single email I get. Just do me a favor. Please don't email me charts and say, hey, what do you think of this? What do you think of that? I don't like those emails. Again, I don't know your trading plan, so I can't help you with that. But if you have questions, if you need advice, I'm always open to contact. So feel free to shoot me an email.
Nice. Really appreciate you taking the time to share your story on the Trading Story podcast.
Thank you. Thank you for the opportunity. This is a great platform.
Man, a great conversation with Akil. I love Akil's quote, whether or not it's original. Focus on process over outcome. I'm not a builder, but I suppose a home builder is not so concerned about visualizing a finished house with the fixtures and the granite countertops and the wood floors as much as he's just trying to follow the blueprints. And Akil is proof positive that focusing on trading process over trading returns works. Focusing on a solid process eventually turns into solid outcome. And man, I need to internalize it, and hopefully you guys can get some value out of the interview as well. Appreciate him taking the time to hang with us today. And thank you guys for listening. Really appreciate you downloading the episode. And on the next episode, we're going to talk about juggling goals as you're starting up or continuing trading, and looking forward to connecting with you guys in a few days. All the best.
Trading Story is a financial publishing firm and does not provide individual investment, trading, tax, or legal advice. All opinion is intended for informational purposes only. Trading Story is not an investment advisor, a registered securities broker-dealer, or a commodity trading advisor. Nothing provided constitutes a recommendation or solicitation for the purchase or sale of securities. Past results are no guarantee of future performance. For more information, check out tradingstory.com/legal.